I had this whole day planned. I was going to leave the desk alone for a bit, clear my head, maybe finally stop looking at commodity reports for more than 10 minutes. And then I saw another round of people saying there is plenty of silver in the ground, so the shortage story is nonsense. And I stopped because that sentence sounds smart until you realize how badly it misunderstands how this market actually works. So here I am right now because someone needs to translate the difference between silver existing and silver being economically mineable, refinable, and available when the market wants it. I think you deserve the full story, so here it is. Oh, I am recording this right now from Phoenix, and I want you to comment what day and date you are watching from, because I always love seeing how far these videos travel, and I want the timeline to be crystal clear, because this story moves fast. And real quick, if you value this kind of straight shooting market breakdown, do me a favor. Subscribe and comment Fin Talk OG so the algorithm knows you want more of this. Now, in case you have not seen what I am talking about, here is the claim making the rounds. Relax. There is loads of silver in the earth. We are not running out. Therefore, any talk of supply stress is hype. And on the surface, that sounds obvious. It sounds reasonable. It sounds like somebody has finally arrived with the adult answer. But when you slow it down piece by piece, you realize that sentence quietly swaps one category for another and hopes you will not notice. That is not the whole story. That is not even half of it. When I traced where a lot of these posts were coming from, the weakness was always the same. People were using geology as if it were the same thing as economics. So I'm going to break down three things. First, the difference between silver resources, reserves, and actual usable supply. Second, why silver's byproduct nature makes the whole supply picture much more awkward than people assume. And third, what this means for investors who want exposure without getting seduced by a slogan. So let us start with the most important distinction in the entire conversation. Silver in the ground is not the same thing as silver in reserve. And silver in reserve is not the same thing as silver hitting the market in the form, location, and time frame the market needs. Here's the clean way to think about it. A house foundation replacement is not the same as a bucket of cement sitting in a warehouse. One is theoretically possible, the other is ready for the job. In mining, people throw around words like resources and reserves as if they mean the same thing. They do not. Resources are broader. They tell you mineralization exists. Reserves are narrower. They are the portion considered economically mineable under current assumptions about price, cost, engineering, and legal reality. And even then, economically mineable does not mean instant. It means potentially recoverable if the mine plan, financing, permitting, metallurgy, and operating conditions all line up. Let me be blunt. And a lot of internet commentary about silver supply sounds like somebody saying there is plenty of lumber in the forest. Therefore, no city can ever have a housing shortage. That is nonsense. Recent USGS reporting and industry survey work make this plain if you actually read it instead of just screenshotting one table. The silver market is not fed mostly by a clean universe of giant pure silver mines happily waiting for a price signal. A huge share of world silver comes as a byproduct of lead zinc, copper, and gold production. That matters enormously because silver is often the restaurant garnish, not the main dish. If the main dish is copper, the mine plan follows copper economics first. If the main dish is lead zinc, The silver output comes along for the ride. That means even if silver demand gets stronger on its own, a supply cannot always answer cleanly because the decision maker upstream is asking a different question. Is the copper project economic? Is the base metal expansion justified? Is the jurisdiction stable enough? Is financing available? Silver can be screaming for more supply while the mines that produce it are listening to another boss entirely. Here is what nobody wants to say. This byproduct structure makes silver supply look bigger on paper than it feels in the market because people see total metal in the ground and imagine a giant silver faucet. No. What you often have is a complicated kitchen where the silver is coming out of the side of somebody else's recipe. Same asset, different interpretation. Oh, this is why the phrase "there is plenty in the ground" can be technically true in a geological sense and still misleading in an investment sense. A correlation is not a contract. Underground presence is not guaranteed market availability. Now, here is the skeptical alternative. Could higher silver prices eventually make more projects viable? Of course, that is plausible. Here is how it can fail. First, mining is slow. Time is the weapon here. You cannot speed run a mine. You cannot speed run a refinery. Even if investors suddenly got religion and poured money at the sector, you still have exploration, feasibility work, environmental review, permitting, labor, power, water, construction, commissioning, and all the wonderful ways reality humiliates a spreadsheet. Second, if a deposit is low grade or metallurgically awkward, higher prices help, but they do not perform miracles. Third, if the deposit sits in a jurisdiction where policy risk is high, the market will discount it no matter how pretty the resource estimate looks in a presentation deck. So yes, more silver can become economic over time. But time is exactly the point. The market consumes in the present. Supply responds on cargo ship time. And that cargo ship analogy matters because a lot of people still imagine commodity supply like a light switch. Demand up, supply up, problem solved. No. This is more like steering a giant ship through a narrow channel. Even if you see the turn coming, you do not whip the wheel and pivot on a dime. Mining capital is slow. Engineers are slow. Permitting is slow. Refining capacity is slow. Skilled labor is slow. And when governments get nervous about strategic minerals or local opposition intensifies, slow can become glacial. So when you hear there is plenty in the ground, the real question is fine, but how much of it can be brought to market at a reasonable cost without needing a heroic price move and a heroic amount of time? Now let us go one layer deeper, because this is where the slogan really falls apart. Silver supply is not just about geology. It is about grade, recovery, and cost. Even if a project contains a lot of silver, the market cares whether you can get it out efficiently. Here's the clean way to think about it. Imagine you own a lemonade stand. If lemons get more expensive, labor rises, transport costs rise, and customers resist paying much more for a cup. You can technically keep selling lemonade. Oh, but the margin gets sanded down. Same in mining. Metal in rock is not the same as profitable ounces in hand. Recovery rates matter. Strip ratios matter. Processing costs matter. Energy matters. Water matters. Financing costs matter. And if your deposit needs a much higher price to justify development, then the ounces exist, yes, but they are living in a different economic universe than the ounces the market can rely on today. This is why recent silver surveys matter so much. They are not just telling you that demand is strong. They are telling you that even after some recovery in mine supply, the market is still running a meaningful structural shortfall and that mine output may not keep rising forever. In other words, the issue is not that geologists forgot where silver lives. So the issue is that current mine and recycling flows are struggling to keep pace with current real world demand, particularly from industrial uses. That is a very different statement from "we are running out of atoms." And yet people keep pretending those are the same thing because it sounds reassuring. Here's a question for you. When you hear there is plenty in the ground, do you take that as reassuring, or do you hear it as a sign the speaker probably has not thought much about mining economics? Drop that in the comments because I read them. Now, before we get into what to do with this, I need to say one thing clearly. This does not mean every silver shortage claim online is automatically correct. Some people absolutely overhype this story. Yeah, some use geological scarcity language to imply apocalyptic immediate outcomes that the data does not actually support. And I am going to say something that might annoy both sides. The silver bugs who act like the last ounce on Earth is about to be fought over in the street are exaggerating. And the dismissive crowd saying underground abundance makes supply stress irrelevant are also exaggerating. The truth lives in the middle. The market can be structurally tight without being literally empty. It can be constrained without being extinguished. It can have enough metal underground for generations and still have a serious problem delivering economically sensible supply into current industrial and investment demand. That nuance is what grown up investing looks like.